Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Tim Stenovec, along with Katie Greifeld. Let's take a look at some stocks on the move. Big banks reported earnings. There was a theme: market volatility sparked by the trade war, leading to record quarters for traders. Goldman stock traders posted the largest revenue haul in Wall Street history. Morgan Stanley stock traders scored their best second quarter on record. And Bank of America traders also posted a record second quarter. Watching all of this closely, Ken Leon, Director of Equity Research at CFRA Research. He joins us from Florida. So record quarters for trading across the board, yet the stock reaction to the downside. Why is that?
When you look at the global U.S. banks, they performed very strongly. What we did see was not only trading, but the elevated markets means that fee income across many different businesses like asset management, wealth management, other services generated substantial year-over-year growth. What we are also seeing is how the capital markets can be the delta for getting stronger growth, and also higher estimates expected from the street looking ahead, both for revenue and earnings. Those that are more balanced or exposed to Main Street America, consumer and small business, are likely to see much slower growth and some risk of kind of sluggish demand in the future. I think that's really the difference between the outsized significant performance of Goldman Sachs, strong growth for Morgan Stanley, and then those that were kind of in between were the JP Morgans and then Bank of America, which didn't fire on all cylinders. That's the difference.
What is the driver of these financial shares? Is it the yield curve? Is it actually the numbers that we get in the earnings report? Is it something else? Because I feel like I go through this puzzle at least 4 times a year when we get these earnings.
Yeah, lucky for you, 4 times. For me, it's every day. And we've been overweighted the financial sector really since last November. And the large banks are, in the top 10 of that sector. And what we've seen even in the second quarter or year to date is tremendous performance, more than 2 times the S&P 500 for diversified banks. But that's not the point. The key point is, where do they go from here? We think the delta, not only for the rest of this year, but really these stocks are going to be priced on 2026 earnings, is going to be how they do into next year. Obviously, 2 to 4 rate cuts, some easing on the regulatory framework, and then also some opening up in the capital markets for investment banking. That's going to help these banks. When you look at them, in terms of PE multiples, or what Gina was talking about, the overall market, they have to earn into these valuations or multiples. When we look at more conservative metrics, which a lot of bank analysts look at, because they're a conservative lot, such as price to net tangible book value, they're pretty expensive. But I think it's earnings growth and what that does in terms of confidence that they can still have upside over the next year or two. That's the key.
Ken, I'd be remiss if we didn't ask you about the drama with regard to Fed Chair Jay Powell. The reports emerging that he would be fired by the president, and the president was seriously considering doing that. We saw a market reaction from the equity side and from the fixed income side. And then we heard from the president, who denied that he would do that imminently. Yet there are certainly concerns about the way that the president feels about the Fed chair. We all know that. What would it mean for banks if this were to happen? Would it mean anything?
So I'm a global director, and I look at markets all over the world. And also when you look at the bond market and really the 10 and 30-year treasury, the Fed really matters. Its independence, the respect and responsibility of its 2 mandates for inflation and full employment. I just think this is color or drama. Jay Powell is highly regarded, and the other issue, of course, is when his term is up next year, likely probably to retire, but he could stay on for a few more years as a governor.
What would happen, though, if he were forced out?
I don't see that scenario.
The president has targeted the handling of the Fed renovation. What if there's something there and he can push him out through that?
So President Trump's going to get a dovish Fed chairman in part. Nobody's really hawkish today. The data will suggest possibly a slower U.S. economy rest of this year, which is why we're much more positive on the delta of the capital markets, not Main Street America, to help large banks' earnings. So we're just going to have to see. But, overall, Fed's going to be independent. And, of course, we're going to get rate cuts either way.
I have a thought as to what would happen to the banks if Jerome Powell were forced out. You would see a lot of volatility, and the banks would probably trade it, Ken. And that brings me back to all of these trading records that we saw, at least for Goldman, and then these bumper quarters that the other big banks put up. Of course, we know what happened in April. We had Liberation Day at the start of the month, and then we had the walk back. And it seems like that was a big boost for these banks. And the question that comes about is, how sustainable is that? When you think about all of this revenue that's being made, how sustainable is that?
It's not the trading. You really need to focus on financial sponsors, which are the large private equity firms. They're sitting on $2 trillion of companies they own, they have to monetize in some way, and also afford the investment bankers to get that job done. That's where I would really look as a delta that we haven't seen really in the numbers and size as it relates to mergers and acquisitions, equity underwriting, or other forms of transactions. Look to lower rates, making it more appealing to valuation for both public and private transactions. That's going to be a bonanza for the large banks.
Ken Leon, Director of Equity Research at CFRA. Thanks so much, Ken.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.